Welcome everyone to our SOAR webinar called Your First Hire, and it's intended to help us figure out what is best when you're hiring, when you're growing your team. So whether you're hiring somebody as a 1099 or a W-2, there's so many complexities there. And so to help answer everybody's questions, we have brought our expert, Eric Monks, who is the co-founder, right, of
Yep.
Pay Forwards, which is a payroll company. So I'm going to let him take over and introduce himself and get started with the content. And thank you so much for joining us, Eric. This is going to be really helpful, and it's so impactful when we bring an expert in to talk about these complicated things that everybody has questions about. It seems very difficult to figure out just by Googling. So thank you for your expertise.
No, I appreciate you having me and us, Jill. So I think it's an important topic. It's probably got a few different layers in there. So I think we want to talk about, some of the strategy behind it, some of the compliance behind it, kind of put some people's, minds at ease on what you can do, where you can find some experts, and really just what you need to look at. But as Jill said, I'm Eric Monks. I'm the president of Pay Forwards. So we're a fully outsourced payroll HRS technology organization based out of Louisville, Kentucky. So we work with a lot of small businesses, startups, up to kind of seasoned businesses, larger, just outsourcing, taking care of their tax filings, their payroll, giving them some peace of mind with some of this startup information, how you get started with your tax accounts and hiring those first employees. So again, I appreciate you having us. I'll kind of dive in here, Jill. Let me share my screen and let me know if you all can see that okay.
Yes, thank you.
Perfect. So first, just kind of going through this a little bit. Again, we're going to talk about, a W-2 employee versus a 1099, how to kind of how to discern, what path you really do need to move down based on a several levels of compliance and what to look at, the differences between those two, what kind of cost and tax implications each of those can have. And then ultimately, I think the 1099 path's a little simpler if you do determine that that's going to be the path based on the compliance and what the job is you need and the skills and the expertise. But if it's W-2, we definitely want to kind of take this a little bit further and say, okay, now what do we need to do? And how do you kind of transition down that path? And so we'll talk about some of those tax implications, what costs come along with that, and then ultimately how to handle those. So first, just the differences between really a 1099 and a W-2 employee at a high level here. Taxes is probably going to be one of your biggest items. Obviously, with 1099s, you're going to pay really a gross, usually a contracted amount, whether that be a wage per job, possibly a wage per hour, but a lot of times it's usually maybe a flat rate based on a project or an SOW on that project. Whereas a W-2 employee is going to take a few different levels of taxation from withholding taxation, unemployment taxes, and a few other pieces that we'll go through as well. Benefits, for a company, typically you're going to offer benefits, retirement, health, ancillary plans to your employees, but not necessarily a 1099 contract worker. And then the legal protections that ultimately those employees will have versus a 1099. And really, those are going to be the key items that we're going to look at how you make those determinations to see if a person does need to fall really under those legal benefits for the employee. And then a lot of that's going to be determined by work type as well. So a 1099 typically going to be a one-time job. Even though you may have a very high skill level that you need for that job, it's typically going to be very limited or provide a one-time, where it's a W-2 employee is going to fall under somebody you want to bring in to your organization, to your culture, more of a long-term relationship there. So we'll dive in. First things first, the big topic that we want to cover is the compliance aspects of this. We're going to kind of cover 4 levels of that today. So we've got the IRS, which is really going to be, more for deciding, does this person or does this job I need done, is it going to carry with it taxation again for that person? And how's that tax going to be handled by the company or by a contract worker? And then we've got more of those legal protections we talked about. So the Department of Labor, equal opportunity, employment and kind of what that covers. And then we'll kind of segue down there to a state example too, to make sure we get those covered. The one thing I'll kind of I'll put a few disclaimers out as we go, but there's multiple levels of expertise that you can refer to. So when you get in these situations, there's a lot of resources out there, whether it be a labor law attorney, an HR consultant expert that you can refer to just to make this decision. But there's also, we'll go through the detail and the level of tools and kind of share, especially after this, and I'm just going to have this sent out, where we're finding these resources, where you can find these resources, and really the key items to look at here as well. So first thing, we'll go through IRS. So IRS uses what's called a common law rule here. And really, I'll kind of read this first part and then kind of highlight the other one. But really, in determining whether the person's providing a service is an employee or an independent contractor, all the information provides evidence of a degree in control, and independence must be considered. And so that control word is going to be something you're going to see very repetitive throughout this presentation. And that's why I kind of wanted to point that out. And also, not to jump to the end of this, but you can see this underlined part saying you need to weigh all factors. And that's going to be another common thread here. And so it's going to be a lot about you as the company. How much control are you going to have? And are you looking at this as a holistic, approach to evaluating this? But ultimately, that common law for the IRS really comes down to three things: the behavior, the financial, and then the type of the relationship. And so behavior, again, is does the company have control or have the right to control what the worker does and how they do their job? And really, it's more the details. Obviously, if you have a relationship and you determine it's going to be a contractor, you're still going to have control over what they do, just not necessarily how they do it and the manner in which they do it, to the detail that you feel like you're going to need a W-2 employee. Financial impacts of that, again, are you going to be covering expenses? Are you going to be covering supplies? Or is that going to be something that this, person brings to the job, in which, in that case, they're probably going to be a contractor? Or do you need to supply those things in which you're probably going to have an employee on your hands? And then the last, again, that type of relationship. So is there going to be written contracts, employee level benefits? Is there going to be maybe daily reporting? Are they going to be reporting to you, all their hours, their work that's going to be done? Or is it going to be more of a total outsourcing project that you're doing here? And then just like to put this last note in there about remote workers. I think the evolution here is obviously changing since COVID, but a few years ago, I think a lot of companies automatically thought, hey, if we're going to work with somebody remotely, they're probably going to be a contract worker, but that's not the case at all. Just because they're remote doesn't really impact any of the decision here. So again, an individual working remotely, if they're performing your services, based on your control at your discretion, they're still going to 100% be an employee. So it doesn't matter necessarily where that work location falls. It's definitely more about the behavior and that relationship and how much you're going to control as the organization. So kind of moving on, the Department of Labor, and you're going to see another theme here, is that these bullet points get a little bit more lengthy for each of these tests as we start getting into the Department of Labor and the equal opportunity. And it's really about protecting, individual rights and employee rights. And that's why they have so many levels here that they want you to factor in. But this economic reality test here, really assesses various factors. Again, it's going to go through a series of factors here that you can see. The common thread is going to be, again, nature and degree of control is probably going to be your biggest one. So how much control you're going to have over how the work's being done and in what manner that's being done. Opportunity for profit and loss. Again, based on, independent contractors are typically going to have the opportunity to manage that on their own, whereas an employee, you're really going to guide that step by step. Just, investment in facilities and equipment. And I think about that as really workplace and the equipment they're using. So investment in the facilities is where they're going to be performing that work, whether it's office work or if it's going to be kind of outside work. The integration of the worker services into the business. I do think this is a pretty interesting one and probably really segues into that control factor too. So if the services provided by the worker are integral to the employer's business, it suggests it's an employment relationship. Now that's interesting because I think anytime you need a contractor, it's still going to be important to the business. But I think what they're saying here is this going to be just an integral part of the business on an ongoing manner in which you're going to always need these services performed by somebody other than yourself. And then you might have an employee relationship on your hands. That kind of segues perfectly to me into the permanency of the relationship. How long is that person going to need to be doing this, performing these, jobs? And is that, again, going to be an ongoing aspect? The degree of skill required, you can definitely have a high level of skill, by a contract worker, almost probably lean a little bit more. And I'd say this, that's where they're going here is if you need a very high level of skill, maybe it's a certification or certain license that they're going to need, and it's not something that you would typically hire into, that actually might lean towards that independent contractor, where you do have that skill that's required, and they're going to have that from day one, rather than you working with them to kind of train and get them to that level. And then the last thing, again, the extent over control of hours. I think, that control factor over how they're doing the job, when they're doing the job, at a very detailed level is always going to be your number one factor to evaluate to really determine, is this going to need to be a contractor relationship, or do I really need to bring this person on as an employee and find somebody who's going to do this work? Two levels here, on the equal opportunity. And again, I don't want to go through all of these, but because you're going to see those common threads again. But really what we're trying to determine here is, again, the legalities around an employer-employee relationship versus employer and contract relationship. That's going to be much, much different. And so determining how that relationship is going to look helps in making the decision of ultimately how you need to move forward. So again, we see that control, when, where, and how to perform. I think probably 90% of these decisions can be made on all four of these levels, really at that control aspect, the when, where, and how. But are you setting the hours during the duration of the job? Is there going to be a continuing relationship between, you and that employee or that person? Or are you going to ultimately say, hey, here's what needs to be done, and they're just going to provide you, periodic checkpoints throughout that to let you know on the progress of that job? And then, workers paid hour, week, or month rather than agreed to cost for performing a particular job. So I kind of listed that, as one of the first items, because again, typically with a contractor, you're going to have a job that needs to be performed by a certain date. They're going to give you an estimate on what that's ultimately going to cost you as a one-time item versus saying, hey, I've got to work on an ongoing basis and I need somebody to be doing that work for my organization. Typically going to lean towards that employee there. And then we can continue going again. The employer is in the business, versus outside of the business. The employee provides the workers with benefits such as insurance, leave, workers' compensation, unemployment rights. Those are things that we're going to get into a little bit more when we talk about the strategy aspects of this versus just the compliance aspect of this. And then, the employer can discharge the worker. Again, don't want to say that's a clear factor because obviously I think an employer is going to have a right to end a contractual relationship with a contractor. So it's not just that determination, but again, based on how they're kind of measuring that. And then ultimately the worker and the employer believe that they are creating an employer relationship. The lovely part about this is you'll see that last note I've got highlighted. The EEO is very quick to point out this list is not exhaustive. And so ultimately what they mean by that is because just you evaluated these 15 checkpoints we have here, that doesn't necessarily mean you covered everything. But again, take that with a little bit of grain of salt. Ultimately, they're trying to protect people's rights out there and help you make an informed decision and making sure we're putting people in the right spots. Again, there's people and I think at the end of the day, you're making a decision that you feel is right based on a series of factors is always going to lead you down a good path. If you're making a decision based on a way to avoid something, then that's when we see that these decisions go a little bit awry. But we'll talk a little bit again when we get into the strategy of this, where you've got resources, where you can feel a little bit more comfortable here. So definitely don't want to scare anybody away. I think we just want to give you the facts on, hey, here's some things to look at from a compliance perspective when you're evaluating not just your first hire, as Jill points out, but I've seen companies where you do have 10 employees and you need a job done. And maybe it is a contractual relationship there where you pull a 1099 and you need a very specific skill set. It's going to be a 30-day job. You need it to be done. You're not going to have ongoing work. You can still fall under those contractor relationships there. So now that we've gone through really those federal compliance items, every state is also going to have a little bit different set of rules. Again, twofold there. They're trying to help you make the decision. Is somebody going to have employment rights, such as unemployment, such as workplace benefits, or are they going to be a contractor for taxation purposes? And so really, I'm using Kentucky as an example here. Kentucky really uses two pieces. Again, very, very common to what we're seeing everywhere else here. Right to control test and the nature of the business test. So the sample question, I think, kind of says it all. Who controls the means and methods of the work performance? And then the nature of the business test, to me, you can see the two questions there that they point out that they really want you to answer, and saying, if the answer is yes, then it's likely an employee. But really, again, are they an integral part of your business on an ongoing basis, and do you have control over them? I think if you use a common sense approach, you're going to cover, again, 95, 98% of your question right there up front, and deciding, hey, you've got a business, you're seeing some success, you're seeing some growth, you're trying to figure out what the next step is. I think if you ultimately answer those questions about control and what you need out of that, you're really gonna kind of lead yourself down that path. But if not, again, there's resources out there. We'll point to some online resources, but also HR consulting companies, labor laws, that they are all your friends out there. And then so won't touch on too much of this, but just to sum up a few of those things, a W-2 employee is a traditional worker that's going to have access to benefits. They're going to be a permanent, working with you on a long-term basis, typically, even if it's in a part-time capacity. Whereas a contractor is typically going to be independent, short-term relationship. You may have multiple jobs over periods of years where you do work with similar contractors, but they're not typically going to be back to back to back to back and working with just that one contractor. And then again, they're going to be responsible for paying their own taxes. We'll really dive into that piece of it. And they don't get, those employee level benefits. And then the last set of differences there, again, a W-2 employee you're going to have kind of a set schedule for them. They're not necessarily going to be able to dictate their hours, tasks, and methods, whereas those 1099s are going to have a lot more autonomy and control over how they're doing that work that you need done. So in conclusion, this, again, I'll put this up there. This is not at all meant to be a scare factor or anything. I think it's more to, these are some of the things that the IRS lists, that the DOL lists. I think it's more about just knowing that you want to make a good decision. You want to be thorough in your decision, and you want to evaluate those factors. Some of these penalties can come later. So, I think you just want to be cognizant of getting your business in a great place from the start. Because if you ever do have a DOL interaction, if ever anybody out there has had one of those, they're typically going to look back as far as they can and evaluate factors that have happened in the past, even if you're speaking with them because they're looking at a factor, in the immediate future. And then getting to the last point there, before classifying an individual as an independent contractor, just make sure you've defined all those requirements out. And then really, again, if you have doubts, there's a lot of great HR consultants out there. There's a lot of great HR consulting tools out there. And then labor law attorneys too. As you're growing your business, you've probably crossed over some of these folks. And a lot of times they're happy to have a conversation with you without having the fear of, am I going to go spend $1,000, $2,000 just to just to have this conversation and have them go through this process with me. A lot of times those folks want successful ongoing relationships. They want to build a relationship with you. So they're happy to kind of go through a few of those questions and say, hey, let's just look at a few of these high level items and see if we can make a quick determination and probably give you a little bit of peace of mind. And then from a strategy standpoint, this is where, we went through the compliance parts of this. You may even avoid the compliance parts of this, if you're going through this strategy first. But thinking, short term, long term, we'll go through the short term strategic parts of this. But the amount of work required, first of all, is it a one-time project? Does it have a very high level of skill that you may not be able to recruit on more of a shorter term capacity? The talent availability. So sometimes working with the 1099 can give you access for a shorter period of time to a greater talent, that if there is, again, some licenses, some certifications there. And then compensation, we'll dive into the compensation a little bit more, but a 1099 rate may be a little higher as far as holistic and concerned, because they are covering their costs, they're covering some expenses, maybe some mileage if they're driving. Whereas a W-2 employee rate may be a little cheaper, but we'll go through some additional costs as far as taxation is concerned, unemployment tax is concerned, and really how you handle those things. So you do want to kind of look at those things in totality, what the project's going to pay, what ongoing basis you're looking at, and ultimately what your budget can handle. And then I think, probably could almost put this in the short term too, but your culture and company vision, you're working on your dream, you're an entrepreneur, you're trying to figure out, where you want to take this organization, or maybe you're even down the path a little bit and make these decisions. But a W-2 employee is a great way, especially if it's your first one, to kind of expand that vision you have for the company. If you're having client interaction, if this role is going to have a client interaction, then, this is a great time to bring somebody in who's going to share that vision, share that methodology in which you're going to handle that client relationship and continue to make the same impression on a client. Whereas a contractor is probably not, there's great contractors out there, don't get me wrong, so don't take that as a negative, but they may not ultimately share the same vision. They're going to handle things the way they want to handle, not necessarily in the manner in which you feel is going to be best for the long-term, culture and vision of your company. And again, you're going to have a little less insight and control over that, a little less oversight in how they do things. And that can be important to you. Definitely important as you set the tone for your company. So those are definitely strategic considerations I would take under first and foremost. If you feel it's a W-2 employee, then you definitely don't really even need to go through those testing considerations we say up front. But if you're kind of on the fence, you'd like to get by with maybe a shorter term relationship, you think it's just, then you definitely want to cover yourself from a compliance perspective as well. But let's say you went through those considerations, you ultimately decide, hey, I'm going to go down the W-2 path. I want to bring on a team member. I want to bring on somebody who's going to work with me. And so, now what? So one, how do we budget for those added costs, and not just the wages, but what comes along with those wages, what comes along with an employee? So first, determine a wage amount. There's a lot of good tools out there for this as well. There's pay scale tools. Again, HR consultants are a great resource to help you kind of input based on a skill level, a work level, where they're going to be located, and what is a competitive job rate in order for you to compete with probably other, employers in your area doing offering a similar job, to make sure you get some great talent there. What fits in your budget. And then, what fits in your budget as far as also those employee benefits and what you want to offer there. So we've got the baseline employee benefits as far as, just taxation alone. And so taxation, you want to add about 8 to 10% to those employee wages, and we'll go through how that breaks down. And then if you want to add benefits such as healthcare, retirement plans, then you really want to factor in more like 20-25%. And that's before we start talking about maybe supplies or equipment or anything like that. So ultimately, if you want to factor all of those things and you feel like you're going to be able to offer benefits, you want to be able to bring somebody in, you want to look at probably 25 to 40%, if you're looking at technology and a desk and some office space or whatever that may be. Um, but again, this is something as we dive into these pieces, there's companies like us that are there to help startups, get off the ground, point it in the right direction, find their resources, find their state resources, find their federal resources, local resources to really give you advice on what needs to happen in order to get you in compliance from day one. And so from those tax items that we're talking about, as far as where those costs are coming from, you've really got three layers here. We've got the federal, the state, and then the local jurisdictions. And so on the federal level, even though federal withholding is an employee responsibility to pay from a withholding standpoint, it's ultimately your responsibility as employer to have the mechanism to get that done. So you're going to be responsible for actually withholding that from their paycheck and paying that to the IRS. That also goes along with their Social Security and their Medicare filing. And then that's where you get a little bit of added cost from the employer standpoint, in which you've got to match those two items. And so those two, just matching up to a certain dollar amount, you can anticipate you're at about 8% of additional costs on top of their wages that you're going to be remitting to the IRS on a regular basis. And then federal unemployment is another piece of that. A little bit more than 0.5% right now, I think, on the first $7,000 in wages each new calendar year. On the state level, again, we're going to have state withholding, similar to what we have federal withholding. Again, this is going to be withheld from an employee's, paycheck, but you as the employer are responsible for making this payment and filing, these wage totals, these tax totals, for the employee. And then state unemployment carries a little bit higher rate than those federal unemployment costs. So you can anticipate as a new business, typically, I'd say around 2 to 3%, again, depending on the state, depending on where you're located. But you're going to pay about 2 to 3% of probably their first $12,000 to $13,000 in wages in order for them to have unemployment benefits. Those rates are given to you from a state. If a state does participate in an unemployment program, those are going to be provided on an annual basis, January 1st of each year. Each business is going to be assigned a new rate. It may just be recurring, but there's a number of factors that go into that, such as what the unemployment pool is for the business. If you've got retained, payments over the years, if you have a high unemployment rate over the years and you have a deficit, you may get hit with a little higher rate. Or if you've got great standing, over 5, 10, 15 years, then your rate may reduce over time as well, because you've got a pool for those unemployment losses to pull from. And then local taxes really vary dramatically, from state to state. Kentucky, Ohio, probably two of the more, I don't know if I want to say complicated state, but definitely heavy on the local taxes. Kentucky, you can count on a different tax for just about every county, with some city tax possibly on top of that. School districts, Cincinnati area is really high on school districts, townships, things that may be a little bit on top of the city taxes as well. And again, those are going to be 100% typically employee based, but you're responsible for withholding them and making those payments. This is where, again, now we talk about how are we going to do this. This is a lot, right? This is a little bit scary when you're looking at it. But again, this is what companies like Pay Forwards exist for. There's a lot of great partners out there, such as outsourced payroll companies, CPA partners, accounting firms that can really help you go through this process. And then, so again, company tax responsibilities, you are ultimately responsible for setting up those tax accounts with the state. At the federal level, your EIN is going to take care of that. But at the state level, you're going to need a withholding account number. You're going to need an unemployment. Typically, those are going to go through two different areas. So I use Kentucky as an example here again. Kentucky, there is basically a portal in which if you have a business license or you've applied for even a revenue license, you probably get an account set up, and you're just going to need to add that withholding tax account to your business so that you have an account that you can remit to. The unemployment side is typically going to be different for every state. So again, using Kentucky as an example, it goes to the Kentucky Career Center. That's who's going to handle that Kentucky unemployment account to help you get that set up for the company. Having an account, that account's going to be, again, what they're measuring each year, what they're looking at the pool of funds in there. If you do have an unemployment claim, that's the claim they're going against, for your company there. We've got some of those portals here, but again, we've got resources. Other companies similar to ourselves have resources to help point you in the right direction to get those accounts set up, help walk you through, hey, here's what you need to do. If there's a couple questions you're unsure about, we're happy to help kind of give you some advice on saying, hey, here's how you need to set that up. Here's the easiest way to get that done. And then on the local level, again, typically you're going to go through the Department of Revenue for a city or county. That may be an online portal. I think I used Covington example is a paper document that you send in. We're based here in Louisville. Louisville does have an electronic portal. More and more of those counties are moving to the electronic portals as well. But sometimes it's as easy as just one document you complete, you send in, they assign you an account, kind of get that set up. And a lot of these folks are really helpful. As a business, if you reach out to the county, ask them what you need to do, they're very happy to point you in the right direction. Additional considerations here, from really managing that payroll is, your payroll frequency, what that pay period's gonna measure. We typically always advise companies to pay in arrears if possible. It just helps you manage that process, gives you a little bit more time, especially if you're planning on some additional future growth, to make sure you get the wages in order. You're able to, tally up hours. Whether you're working with an outsourced provider or not, you can go through that process, make sure that the deposits are timely to your employees. So that's where we'd say pay in arrears. I give an example of a typical biweekly pay cycle we see here. It's based on the Sunday to Saturday work week, covering 2 weeks. That really helps from a standpoint of calculating overtime. Some companies do vary that and kind of crossover weeks. Similar with kind of a semi-monthly payroll. To me, I think that can bring a little bit of complication, into your calculations. But again, if you're using an outsourced provider, those things are really automated. It's just kind of about employee visibility and making sure they easily understand. And then from a time traffic perspective, if you're going to have an hourly employee and you can find a nice tool, to automate that from day one, I encourage everybody to do it. It's going to save you not only time, but it's just going to make it cleaner and easier for employee visibility, making sure you don't really have any kind of complication or confusion or, an easy way to look back on that versus a paper time card. And again, as you grow, it's just going to make that process easier for you. So kind of think about, you're going to have success, you're going to have success. So think about those things from day one. And then again, how to manage these things, I kind of point to about 3 options here. Some companies still do love to manage this in-house, and what I would just call a more manual process. I think that is challenging. It is the lowest cost sort of way, but I think when you evaluate the cost of these, it's definitely, probably 99% of the conversations we have with first-time, companies that need to file payroll for the first time are kind of just, they couldn't believe that the cost is a lot less than what they would anticipate, thinking about, their accounting side of things and what that looks like. So, calculating taxes is getting more and more difficult by the day. There's more tax jurisdictions out there. Not only that, you may miss something. You may not be notified that there is a new account, and if we move, now they're in a different city. You didn't realize it. Things like that you're really responsible for as the employer. Then I would say more like in-house systems. Whereas if you do use QuickBooks, for your accounting, they do have some tools internally. I'd probably encourage you to still look outside of that. There's a lot of good outsourced companies. I think the tools are just a little bit better, whereas QuickBooks still relies on more manual interactions within their platform to perform that payroll. I think their mechanisms for transactions is all clean, but I think making decisions, that's where they're really not going to help you with that process. Whereas an outsourced provider is really probably going to be willing to give you a little bit more advice, lend an ear to a little bit better support process, a little more responsive to an email or call on a question versus kind of sending you to maybe like an online community. And then just additional considerations from an employer standpoint. Again, pretty long list here, but these are things I think if you've got the time to really sit down and consider, and you can anticipate this 3 to 6 months ahead of time versus you're kind of 2 weeks out and you say, "Oh, I need a job, I need to work." So even if you're not at that phase yet, I would encourage everybody to take a little time, sit down and say, okay, what if this day comes? What am I going to need to do? And you're a little bit more prepared from that point. So again, thinking about the legal compliance paperwork that you're going to need on hand, things like federal I-9s, federal tax forms, state tax forms. I can tell you if you're in certain states, you are required to do things like e-verify, verify social security number. There can be pretty complex penalties for that. We've seen that in new states that started enacting that, especially in the restaurant sectors and the sectors where you got a lot of employee turnover. So, take your time to kind of visualize down the road if you do have that success, what's going to happen, and be prepared for that. And then benefits, employee benefits is becoming, in my opinion, much easier over the past 2 to 3 years for small businesses than it was 10 years ago to compete with a larger employer, to get access to lower cost benefit plans. There's a lot of state level association, group level, local level associations that now offer benefit plans for health insurance, ancillary health plans, even kind of bringing in some IRA providers, some 401k providers. The access has probably never been better, for those avenues, and much easier to evaluate as well. So there's definitely great tools for you as a small business to have access to really good benefit plans. Again, I know I've probably said this 5 times, but I do think HR consulting partners out there are fantastic. They can help you with a myriad of things, not just making those decisions, but thinking about strategic considerations around HR. HR I don't think is any longer thought of as the disciplinary arm of the company. To me, it's much more of the strategic employment arm of the company. How do we build a PTO policy? How do we create a handbook? How do we make our company an inviting place where people want to come be part of that, so that they can again buy into our vision, work with us, and really be partners, to us, and not just come in here and perform a task. And so there's a lot of great partners out there. There's also a lot of great online tools. If you are looking for just a simpler access, there's HR compliance tools out there that, there's free ones, there's cheap ones, very minimal cost per month. They can give you compliance alerts by state. They can give you handbook builders, recommendations on PTO policies, time off, how to manage sick, how to manage FMLA, things like that. And then recruiting tools are really great as well. There's obviously a ton of job boards out there. A lot of times those job boards now even give you free access to some of those pay scale tools we talk about, to make sure, hey, are you in line with the hourly wage to be competitive, or are you at kind of risk to maybe lose somebody, or and you want to be competitive in that and making sure you're bringing in great people. And then kind of, these are just, a few final thoughts from my perspective. But again, if it's financially viable, consider a strategic decision over a tactical decision 100% of the time. I know that's not easier said than done. I know when you're out there and you're grinding away and you're trying to build this business, and then all of a sudden you start having success, sometimes that success then spurs you on to a quicker decision than you want to make. So have in mind that you're going to have those success, and start planning ahead if possible, thinking through what an employee environments looks like, what you want that employee to look like, what you want their benefit access to look like, what you want it to look like if you were in their shoes. And I think that's an important way to look at it too. And then, be thorough in investigating, those compliance items, especially depending on what industry you're in. You probably want to take a look at, hey, is there some industry compliance that I need to look at as far as federal or state laws are concerned, local regulations, things like that. Definitely dive in and at least do a little bit of research. Ask some experts. Again, there's a lot of experts out there that can help you, fellow people within the business. And then that's where I kind of get that last one: consult with experts. again, don't be fearful. I think I definitely had the fear, 10 years ago. It's if I'm going to go ask, a labor lawyer a question or, a CPA a question, I'm going to get into a relationship there where it's going to cost me a lot of money. No, a lot of times they want to see you be successful. Those folks are happy to help out. They've been in those shoes before. They're looking to form a relationship with you. And if they can do that initially by just helping you get off the ground, then that pays long-term dividends for them as well. And so there's a lot of great resources out there. But that's it. There's really great resources out there. Don't want any of this to be a scare factor by any means. Just want to give you some visibility and things you want to look at to help you make those decisions and ultimately help you start or continue down that successful path that hopefully you're on.
Thank you so much, Eric. That was really, it's, as you say, it's a lot of information, and it's so many compliance related issues that I think it's it's challenging for the layperson and or somebody who's not doing business like that, right? Like who's not in a business like that. So I think it's really helpful for you to just share this information. We're not Googling it, right? We can have somebody right here to ask. So thank you very much for that.
No, absolutely. I mean, I think that's definitely my goal in these type of situations is figuring out how we can condense some of that, give some advisement and ultimately try to find a way to help somebody stay focused on their business and not these aspects of the business that kind of have tos, I would say.
Exactly. So if you don't mind stopping the share, then I will put it and open the floor for questions. I have a few in case nobody else does.
Yep, sorry. Okay.
That's okay.
I'm getting there.
I think there's a way that I can do it, but I can't remember how. Oh, I can do it. There we go.
Can you get it? There we go.
Yeah.
All right, I'm off now.
Okay. Your camera's, oh, there you are. Good. So, yeah, definitely want to open the floor for questions. If there's anybody who wants to ask anything, just come on, just unmute your mic and you can ask. In the meantime, I do have a few questions. And
say, Jill, if you want to go ahead and pin just you and Mark or you and Eric, that'd be swell.
I did actually. Thank you.
Oh, you're so good.
I know. I'm so technologically advanced here. So, here's my question. So if I hire somebody to build a deck for me, they're not considered a 1099. So they're only a 1099 if they're doing work for me in the capacity of my business. Is that correct?
That would be, yeah. There's some rare instances depending on maybe how a business chooses to tax itself, but yeah, typically it's always going to be a business to business interaction. Okay. Yes, absolutely.
Okay. So and I know that you and I have talked about this before, but can you go into a little bit about working with a VA? So if a VA, I mean, obviously, as you mentioned before, like you want to find somebody who's a trusted partner, but the VA has several clients. And so I would think they are VA on purpose because they don't want to be a W-2 employee of anybody's. So are they, even if you work with them long-term, does that violate the length of time part of the compliance issue?
No, I don't think it does. I mean, not from my perspective, because I still look at, to me, you're kind of like contracting a service, to them, but you're not necessarily outlining the interaction of that, on an hour to hour basis and going through that. And I would sort of say maybe while it's a key piece of the business, it's maybe not part of that like growth aspect of the business. I think you could consider that, but I think it's more of a function that needs to be taken care of for you. Yeah. So I'll look at that again a little bit differently, and you're just contracting an outsourced service that needs to be handled.
Okay, so similar as when you were talking, I thought too, there's some women that that we work with who have companies where they are like a fractional, they want to serve this be the fractional chief marketing officer, for example, or a fractional accountant. And so they, again, don't want to be an employee. And the pitch to the company is that they are saving money because of that. They don't have to add a person to their payroll. But if they're a fractional marketing, chief marketing officer, this is going to be a long-term relationship. So again, that is a similar compliance thing, like you said, for the virtual assistant. Is that?
Yeah, I think this is just my opinion, but I think probably the fractional marketing versus fractional accounting could be slightly different. I think they can absolutely both fall under a contractor relationship, especially the accounting. I look at like fractional accounting. We utilize that here, that way we kind of have multiple levels of CPA we work with. That way it helps us kind of go through audit perspectives, and that multiple pieces are outsourced and double checked. But again, to me, here internally, when I think of a fractional bookkeeping service or fractional CPA that we utilize on a monthly basis, we've got a set requirement of report and financial reports that we need performed. We send them the information. They control how they do that, making sure they're they're compliant, they're handling that, ultimately give us, our reports back to us. We're not controlling that service.
Do you send them a 1099 or are they just considered somebody that you hire? Like a company that you hire, you know what I mean?
We do send them a 1099, but I do know that's also could be dictated, based on how they tax themselves. So I think like an LLC taxes an S corp may not need a 1099, where an LLC is a partnership may need a 1099. A little bit outside probably my scope of expertise, but the only reason I know that is I had that conversation this morning on actually an outsourced consultant that we use here internally. We deemed they didn't need a 1099 because they were taxing themselves as an S corp.
Oh, that's very interesting. Okay.
So I think marketing can definitely fall under that, and the other reason I'd probably think to evaluate that a little bit differently. I think it depends on what marketing service you're doing. So maybe if you're doing like, SEO service or just maybe ongoing writing, and it's kind of you just say, hey, here's what we need, and they perform the service, versus you're doing a set of marketing you're constantly working on that, you're tweaking things every day, you're kind of controlling, hey, here's what we need to do, here's what path we need to go down. I think that can be a little bit different, just depending on how you're controlling the services.
Okay, that makes sense. It feels like that is the more critical piece than the long-term question. Yeah.
Yeah, and I think that I do think, the great part about that is, so we even offer, like we partner with an HR consulting company to offer outsourced administrative services to manage people's payroll for them, their full, HR admin, their payroll. And I do think there are some cost benefits to that, because you may not need a 40, 50 employee company, even may not need somebody full-time handling that for them. It may be 10 hours a week. And so if they can outsource it, and they can outsource that, and it's more of a contractor relationship or a company they're just using as a vendor, that can definitely fall into there. So there are some benefits to that fractional CFO. And I think probably more and more companies are starting to outsource more functionalities like that.
One of the women that I was talking with recently, she works with several 1099 contractors on a part-time basis. And she expressed that she would like to hire somebody part-time, but she's worried about making that commitment to somebody, because what if the business dries up, or, maybe some weeks she might not have somebody enough hours to give them. What are your thoughts around that? Like, is there?
Yeah, I think that's a tough one. I mean, my thing would be, I think if you're upfront about setting the expectation there, and you say, hey, there may be instances where there may be a week go by that we don't need that. And I think that the key to me, if I'm in that seat, is making sure that I've set the expectation, and that I have somebody that I'm working with who's okay with that expectation.
Yeah.
Because I do think probably the last thing you want is to be have a part-time employee who doesn't know that expectation, may not be aware of it, and they need that income on a regular basis every month.
Yeah.
Whereas if you can find somebody who doesn't, is okay, that's saying, hey, sometimes I know things are going to pop up. I may not have any hours this week. That's okay. That's a
I mean,
relationship
that's
you
kind of
want for
how
the
it would be
business.
if you're doing them, working with them as a 1099, right? It's almost the
Yep.
same thing, except they have
Yep.
some benefits. I remember hearing you were talking with another woman that I was listening, and they were saying that it's about 2 times sometimes the amount that a contractor charges is 2 or 3 times the amount that you would pay as an employee. So it really does kind of start to make sense sometimes to bring them in-house if that's something you can use regularly, right?
Yep. No, that's what I said. I think, and again, this is me personally. I think, if there's an avenue to bring somebody in-house, and you can do that, I think there's so many great benefits from that. I think, but again, sometimes there may not be. It may be a project you're not sure when the next project's going to
Yeah.
be. It may be a high level of skill that you do need to have that completed. And so you do need to find a contractor with that expertise that, quite frankly, you're probably just not going to be able to hire somebody on a short-term basis or a part-time basis for that.
Or afford them, right? I mean, if it's a high
Yep.
level of skill, you might not be able to afford them any other way. So that makes sense then
Yep.
too. So when you are, and again, like anybody who's watching, feel free to jump in with a question, but I did have one more question. What so when you like, how do you work with a startup, or how do you work with a small business that hasn't like on their first hire? How does Pay
Yep.
Forwards work with somebody like that?
No, so it's quite often for us. I mean, we're probably working with a few startups, really either hiring their first employee or sometimes even paying themselves. They've moved over from an LLC to an S corp, and they need to now become a W-2 employee themselves. But the first thing we'll do is just kind of sit down with them and kind of understand the situation. If it is something where they're bringing on their first employee, we'll share some feedback on them again, because they might not know, things like I put the pay period in there, pay cycles. They may not know what's standard out there. So we'll kind of share some, hey, here's what we see as commonplace. Here's a couple options you may have. We'll figure out, where that employee is going to be located, what work they're going to be performing, and then give them, basically, I call it kind of our getting started checklist we'll put together for them. But we'll kind of put a list together and kind of give them some direction of the links to go to, the forms that need completed, bring our tax team into the conversation if we need to, but really just try to give them a step-by-step direction on what needs to be done so that we can start the payroll process for them. Because
It's really
it's
helpful.
tough, it's confusing, and so we want to give them, make it easy for them. And for us, it's not that complicated because we've been doing it. So if we can create something that's simple on our end and make it simple for them, then that's a win-win. We're saving a ton of total time together and just helping them get started. And again, it's all about, we're entrepreneurial business. We're a small business. We've been in there, and so we can help that out. Long term, I think those things pay dividends in a multitude of ways. So we've kind of got a soft spot for startups, especially. We kind of love working in that community.
That's great. Well, you once were one, right? So you get it.
No, that's right. And I mean, they just, they don't know. And if we can, I'm a worrier by nature. So if we can help take that worry off somebody's plate, like that's nice to be able to do. So that's a positive.
Mm-hmm. Well, and startups have really big things to do to get started. So to have that.
Yeah. And it's, not to, go down a wormhole or anything, but it's complicated. Like running a business is complicated. And so if like we can make one thing a little bit easier there, then that's a positive we can bring. Because I know on the other side of that, they're going to have their revenue taxes, they're going to have their compliance, they're going to have their licensing, they're going to have CPAs they're working with. So it's like, if we can take a couple hours off of the plate with this item and say, hey, we're gonna help you out, and it's not going to be a big cost by any means, then that's a benefit.
And I think that's really interesting what you said about how it's really so much less expensive than somebody realizes, and to have all of that off their plate.
Yep.
Is so great. I mean, I know personally, if I had to do it, I'm not really great with admin stuff. Barely hanging on. If I had to add payroll, no way.
No, I mean, I'd say 9 out of 10 businesses that I've talked to over the past, 5, 6, 7 years that come to us and we're doing it manually, and then they get a quote and they're like, I wish I would have known this years ago. We would have went ahead and did this. And
Yeah.
I'm like, yeah, it's not a big business expense to outsource that and have it handled. And it's definitely worth looking at outsourcing solutions there.
Yeah. And to me, just keeping up with all the compliance things, like you said, oh my gosh. I mean,
Yep.
please do
Yeah,
that for me.
now you don't have to worry about keeping up with the
Right.
taxation or the change in rates. It's like, we or another company out there, they've got teams that take care of that for you.
Right.
So
That's great. Well, thank you so much for doing this webinar for us. It's been really, really helpful. And we're going to send out the replay to everybody that registered and put it on our website and our YouTube channel, so people will be able to access it going forward.
no, we appreciate it. Appreciate you having us on, Jill. And yeah, like I said, we're always happy to, answer any questions we can.
That's wonderful. Thank you again. Thanks to everybody who's
Thank you all.
is watching. Thanks. Bye.